What's up, everyone? Excited to give this video today about DraftKings. So there is some very interesting, important news that we just found out on Friday, actually. So DraftKings has made a $195 million cash offer to PointsBet U.S. assets. So what does this mean? This means that DraftKings is now trying to buy up smaller players within the sports betting space to help increase their market share. And when we look at kind of the breakdown of the market share for DraftKings, it's pretty interesting. It definitely shows that this move makes some sense for the company. So this is just Michigan. This is super recent number. I think it came out just like a month or two ago. So basically, as you can see, FanDuel and DraftKings are the main players. Obviously, MGM is a pretty big player in this space as well, but throughout the whole U.S., they're not really that big. So I'm just going to focus on FanDuel and DraftKings. So they're basically splitting market share for most states. And then we have others taking up about a quarter of the market share. So I think really when we look at FanDuel, DraftKings, and the other larger players, the the winner of the line share of market share for the sports betting space will be the companies that are able to gobble up these smaller companies like PointsBet. So I really love this move by DraftKings to invest in the space and invest in this growing industry to try to obviously be the company with the most market share for the sports betting space. And when we look at the U.S. as a whole, so as you can see, it's really FanDuel and DraftKings and everyone else. BetMGM takes up about 15%. Next highest is DraftKings at 24%. So, like I said, it's really FanDuel and DraftKings and everyone else. Still think there's a lot of opportunity to take kind of the smaller shops in, and you can see PointsBet takes up about 3% of the market share. So it would be over a 10% jump in market share for $150 million, which seems like it would really 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 make sense to do in this growing industry. And then here once again, you can kind of see FanDuel and DraftKings being 1A and 1B, with the most familiarity throughout the public for DraftKings, and the highest amount of users on DraftKings as well. And when we look at users, that kind of dovetails into website visits and overall website activity. And we can see the number one ranking website in terms of visits and activity for the sports betting space is DraftKings. So that's awesome to see. That online, that web footprint is definitely largest with DraftKings, FanDuel being second, and then Prize Picks being fifth here. So awesome to see that. Definitely, and it's very important in this day and age to have a sticky and large digital footprint, and that's definitely being shown for DraftKings with the number one spot in terms of website visits in the space. And then let's look at U.S. sports betting. So as a general market, this is growing like a weed. It's growing at an insane pace, at 10% a year compounded annual growth rate for 2023 to 2030, excuse me. So that's an insane amount of growth, and we could see that this is even broken down by sport, which I thought was pretty interesting. So you can see that others category of sports continue to grow as the industry matures, and that kind of makes sense, right? As more lines are put out, more sports are being bet on. That other category is really shining bright. Especially we had a lot more women's sports on sports betting's apps, and I think that's good for the women's games. So I think we see that others category continue to rise. And then what I'll do for the rest of the video is I'm going to go over the chart, give a price prediction. Then I will also go over some seasonality trends we're seeing for DraftKings, and then I will jump into the financials and the fundamentals of the stock. So with that being said, I'll jump right into the chart. So DraftKings moved above resistance around $21, and $21 is about where shares had topped out in February, on the 17th of February, and also on the 12th of August of 2022. So now that we've moved above this resistance level where shares had topped out in the past, we've seen shares steadily move higher. And I think we see a continuation of this move higher over the coming weeks, especially because momentum looks absolutely amazing for the stock. And the reason I say that is because the stock is trading above all daily moving averages, but we had the 50-day moving average cross above the 200-day moving average on March 2nd, which is a very bullish technical indicator. It's called a golden cross and implies bullish momentum. So that's really awesome to see. We're above the 50-day, and we actually used this 50-day as support back in March and early April. And I believe the 50-day could also help, add some support to the stock and push shares higher. So my official price prediction is that we likely continue to consolidate maybe a bit over the next week or so around this 50-day and this support level. Past resistance becomes new support for those that don't know. So this was a resistance level at 21. Now it's support. As we kind of consolidate and use this level as support, I believe we move higher to up to $44. And that is based on the next really major resistance level I'm seeing in the chart. So this $44 level was where shares had bottomed in July of 2021, also where shares had bottomed in May of 2021, and then also in January of 21. Also where shares had topped out in June of 2020, and June or early and late June. So with that being said, I do believe we likely move up to this major resistance level at $44 over the coming months. I really do like the sector, as I just kind of laid out. I think the stock has a decent market share within this growing sector. So pretty fundamentally bullish, and we have the technicals lining up here. But let's look at some seasonality trends. So this screen shows you in what months does the stock do best. So just simply, in June, the stock typically declines 11%. In July, though, the stock typically rises 13%. And you can see the only period we have of 3 positive months is July, August, September. So this summer month, this summer season is a very bullish one for the stock, which should really help push shares higher, especially given we have the technicals lining up. As I said, large player within the market. So I do believe this seasonality bullish trend could help push shares higher as well. And then in terms of the fundamentals for the company, this is Seeking Alpha, and basically they put valuation, growth, profitability, revisions all relative to peers. So relative to peers, Seeking Alpha is giving DraftKings an F as in terms of their valuation. So pretty interesting to see that, and I will jump into each. They're giving them a C- for growth. Let's jump into the valuation part of things first. So obviously the company doesn't make any money, but EV to sales is 4.4, and the sector median is 1.1. But that multiple is suspected to come down to 3.5 over the next 12 months, which is a good sign. And the sector median for the next 12 months is 1.1 as well. So things should be getting better in terms of EV to sales, enterprise value to sales. And then price to book ratio is a lot better than I would have thought it would have been, honestly. And keep in mind, the sector we're comparing to is casinos and gaming. So it's a tough comp, right? Like there aren't many publicly traded sports gambling sites or stocks, I should say. So it's kind of tough to compare them. We have FanDuel, but that actually trades OTC, and for those that are interested, FanDuel's ticker is PDYPF. Flutter Entertainment is the stock, but anyway, So price to book ratio is 11 and the sector median is 2.2. So for those that don't know, price to book ratio basically means the market cap relative. It basically puts the market cap relative to the assets on the balance sheet. So in this example, a price to book ratio of 11 means that the market cap is 11 times the value of the assets on the company's balance sheet. So that might be equipment, cash on hand, property, whatever it may be. So that's not too bad, especially for like a very growthy stock that this is. So let's take a look at some growth metrics. So valuation is important to look at for any company, but with a growth stock, the growth metrics are more important because obviously most growth stocks in the market trade at high valuations, right? High multiples. The only logical reason that there would be a high multiple on a stock, it would be the fact that growth is expected to continue to rise and the growth metrics are there. So this is 100% the case with DraftKings. Growth is definitely rationalizing that valuation, as we have revenue growth year over year at 85%. The sector median is just 8.8, and then revenue growth for the next 12 months is 44%, with the sector median at 6.8. So that's really awesome to see. It's like I said, it's very important to have the growth metrics lining up with a high valuation to kind of rationalize that valuation. So awesome to see. Also capex growth, so they're growing their capex at 39% compared to the sector median of 17%. So the company is in full growth mode and it's paying off, as you can see at their numbers. So awesome to see there. Very important. I do not invest in any growth stocks that don't have growth. So it's good to see that there. And then for DraftKings, so this is pretty amazing. I really was excited to cover this. So for those that don't know, analysts put out revisions on their estimates. And on this channel, I assume that you have pretty much zero prior knowledge on this, so I will explain it from the top. So Goldman Sachs, JP Morgan, they all have specific covering analysts, people who have worked in the financial industry their whole life. They follow specific companies and try to predict their EPS or revenue. But they change their expectations for EPS and revenue on a pretty consistent basis based on company specific news, general stock market trends, general consumer spending trends. So it could be specific to the company, or it could be, not super specific and more based on, the general economy. But here, it's very clear that Wall Street is becoming more and more bullish on the stock. So over the past 3 months, we've had 12 different analysts move their EPS revisions higher, while only 2 analysts moved their EPS revisions down. So net, 10 different analysts becoming more bullish on the stock. And then revenue, when we look at revenue, there's there's exactly 27 up revisions for revenue over the past 3 months, and there's 0 down revisions, which is amazing to see. I really love to see that. So net, we're having 39 different analysts take their expectations higher for EPS and revenue. So that makes it very clear that Wall Street is becoming more and more bullish on DraftKings, which will only push shares higher. And I'll kind of wrap it all together here. So we have DraftKings, coming in and trying to buy a smaller player to increase their market share, which should only help the stock. And then we have that lining up with very bullish technicals and a bullish seasonal trend for July, August, and September. So with that being said, the stars feel like they're aligning for DraftKings to continue higher and be a great long-term investment, especially if you're looking to gain some exposure to this growing, skyrocketing sports betting industry. Also, we have the valuation being rationalized by extremely high growth rates. So with that being said, I'm bullish DraftKings. I hope you enjoyed the video. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.